biggest class.
Welcome back to my teachers programs. Hi viewers. See, now today we are discussing very important portion, that is cash flow statement. See, for the last half an hour I am discussing the theoretical part of this cash flow statement. Now we are coming to the practical side. You know, today, see, I am going to discuss, the thing is that, see, you can see in our question, you can see the monitor, how to prepare these tax accounts. Nowadays the board is asking, or they are giving 2 or 3 adjustments. You know, before they are giving 4 or 5 adjustments. Now the board is asking only 2 or 3 adjustments, and also very easy adjustments. So namely provision for tax account, or accumulated depreciation account, or fixed asset account to find out purchase or a sale. Now you can see along these particular questions, I am going to give the specimen of tax account. Suppose in the question they are given tax paid, or they are given tax made. You know that tax made is given or tax paid is given. So tax made means, you know that by profit and loss account, provision, the profit and loss account added to provision for tax account. So that means we are not using, when we are posting, we are not writing tax made. So we are writing that is by profit and loss account. So what I meant, in the question they are given tax paid, along with in the balance sheet they are given current year as well as the previous year the provision for tax. So how to make provision for tax accounts? The students have a lot of doubts. They have no idea how to prepare this tax accounts. So whether we are taking a credit balance or we are taking a debit balance. So all of you please look at this board. So provision for tax accounts. You know, we are getting a balance sheet. Look at the monitor also. We are getting 2 years of the balance sheet. The current year as well as the previous years. 2 years balance sheet we are getting, and on the basis of that we are preparing the provision for tax account, and on the basis of that we are preparing this cash flow statement. So now look at, see, sometimes I think this question they are given provision for tax made is given. So that means tax made is given, and also short term provision they are given. So the previous year as well as the current year. 2015 is the current year and the previous year is 2014. That means you can see the short term provision provision for taxation is there. That is 2015, that is 8,400, and the previous year that is 6,000. And along with that they are given tax made, which is given 9,400. See, now I am giving only the specimen. On the basis of that, suppose in the balance sheet 2015 provision for tax is given, and also 2014 provision for tax is given, and also the adjustment they are given, the tax made during the year. In this example you can see rupees 9,400. So if they are given adjustment like this, so we should prepare tax accounts. So what about our current year amount? So that we want to find out. They are given tax made or profit and loss item they are given. So what about to bank this year, how much money we are supposed to pay? So provision for tax account debted to cash or a bank. So how to calculate the specimen? Now I am explaining the provision for tax account, whatever the figure, whatever the digits, you know the specimen, you can easily find out the tax made or a paid. So look at the, forget about the digits. So look at here, what is the specimen of provision for tax account. Here also please try to understand, the provision for tax account is showing a credit balance. It is not showing a debit balance, it is showing a credit balance. So look at the monitor as well as the board. So you can see by opening balance, that means last year's balance we are taking by opening balance, and also the second item which is given here by tax made or by profit and loss account, and also to closing balance. This is opening balance, and the tax which is given in the adjustment, that is by profit and loss account tax made is given, and also you can see the closing balance also given in the question. So you can look at our question. So short term provision, the tax is given by opening balance, and also the tax made what is given in the adjustment, and also the closing balance is given. You take out the difference, the credit total minus debit total is equal to tax paid or to bank, provision for tax account to bank account. So we are getting the answer is to tax paid. This tax paid, where we are putting this amount, that is another point. So in the question they are given tax made or profit or loss is given, or otherwise the tax to bank tax paid we want to find out. So in my example I already find out now tax paid. The format is by opening balance. So last year by last year's balance, then in the adjustment they are given tax made, that is by profit and loss account, and the closing balance also given in the question, and on the basis of that you can find out credit total minus debit total is equal to tax paid. So now listen, the tax paid we are writing on the operating activity the last item, that means cash inflow or outflow from operating activities. Just before we are writing less tax paid, less tax paid. Then tax made we are putting along with the profit and loss account, statement of profit and loss account. You can see the tax made, this amount we are adding with the profit and loss account. You can look at this answer, they are given everything clearly. So see, you can see this this same illustration answer they are given. You can see statement of profit and loss plus add general reserve and proposed dividend plus provision for tax. The tax made which is given in the adjustments. See, all of you please look at this monitor, especially that ledger account, provision for tax account. Provision for tax account is always showing a credit balance, and also the adjustment made, tax made or profit and loss is given, that we are taken into the account, and left hand side we are taking the closing balances, and finally we are getting so you can see now it is clear, provision for tax accounts by balance brought down, that is the last year's balance, and also the tax made which is given in the adjustment that I have taken, that is statement of profit and loss, provision of tax made, and also the two closing balance which is given in the balance sheet, that is 8,400. Now you take the difference, that difference is known as tax paid. The journal entry is provision for tax account debtor to cash or a bank. So this tax paid we are putting in the operating activity the last, and also you can see this question. So the tax we are putting in the operating activities, tax paid, and tax made we are putting along with so tax, yeah, so you can see provision for tax account and tax paid we are minus from operating activities, and tax made we are adding with the statement of profit and loss account. Now it is clear. Once again I will explain how to calculate provision for tax account, provided if it is given in the question, if tax made is given or paid is given. So that is a very important thing. So suppose they are given tax paid is given, how to calculate? Tax paid is given but made is not there. So how to calculate tax made? So same example you can see. First what we are writing, by opening balance, by opening balance. Then here they are given tax paid, so to bank, so they are already given, and to closing balance. So take out the difference. So that difference is known as by profit and loss or tax made. So that means it is depend upon the question. Sometimes they are given tax made or sometimes they are given tax paid. And if it is given tax made, so that made we are adding with the statement of profit and loss, and if tax paid is given, so that we are minusing from operating activities. Now I think it is clear. So then look at the next account. The second account is known as accumulated depreciation account. So that also confusional account. So when we are preparing this accumulated depreciation account, so just look at this monitor again. See, accumulated depreciation, again accumulated depreciation account is always showing a credit balance. So accumulated depreciation account. So you write by opening balance, accumulated depreciation account is always showing a credit balance by opening balances and two fixed assets. That means the accumulated depreciation during the year. So fixed asset and two closing balance. So here one doubt, why we are preparing accumulated depreciation account? Answer is very simple, to find out depreciation of the current year. So you can look at the monitor, accumulated depreciation account by balance brought down and also to fixed asset. That means the depreciation, accumulated depreciation during the year. So that is to fixed asset and also to closing balance, and take out difference. The difference is known as the depreciation of the current year by depre. So you can see by depre or by profit and loss. So depre is by profit and loss account. So this is the answer. So take out difference. The difference is known as the depreciation of the current year. Once again, accumulated depreciation we are preparing to find out depreciation of the current year. How to calculate? So in the question they are already given fixed asset minus accumulated depreciation. On the basis of that, 2 years balance sheet they are given. So formula is by opening balance. So accumulated depreciation also showing always a credit balance by opening balance, and left hand side to fixed asset. That means accumulated depreciation of the current year or the amount which is given in the adjustment, and to closing balance, and take out difference. The difference is known as by depre or by profit and loss account. The amount what we are getting is known as by profit and loss account, the depreciation of the current year. So that depreciation where we are writing, so operating activities, items to be added or non-cash expense items to be added, there we are taking this depreciation. So now listen, we have studied 2 points. The first point is known as provision for tax. If tax made is given, find out paid, and if paid is given, find out made. And tax made, it is a part of profit and loss that we are adding with the net profit, and also tax paid is also part of operating activities, but we should minus. Then again next one, accumulated depreciation. Accumulated depreciation we are calculating to find out depreciation of the current year, and this also commencing with opening balance and ending with the closing balance. So the account, the opening balance we are showing in the credit side, and also to fixed asset and to closing balance, and take out difference. The difference is known as the depreciation of the current year. Provided these all details are given in the problems, we should calculate. If they are given accumulated depreciation or the adjustment they are telling something about machinery purchase or sales, or accumulated depreciation is given, you should find out the depreciation of the current year. And also the question they are given tax made or paid, we should calculate either paid or made. And the third point is that fixed assets or asset account, how to calculate asset accounts. So you can see asset accounts, we can find out purchase or a sale, or we can find out a depreciation. So now listen how to prepare fixed asset accounts. So we want to find out purchase or a sale. Now you can see fixed asset account is always showing a debit balance. So you write here to balance brought down, opening balance to balance brought down, and part of the machinery we are selling this year. Suppose, so you write here by bank, then by depreciation, and actual value minus selling price minus depre, we are getting a profit or a loss. Suppose we are assuming we are getting a loss. The next by closing balance. So you can see it is very clear. So these are the main item we are putting in the fixed asset account. Just look at this specimen. So we want to find out purchase of a fixed asset or selling of a fixed asset. We are calculating on the basis of this, that is to balance brought out. Asset account is a real account, so it's always showing a debit balance. So you can see to balance brought down, opening balance, and by bank. So selling price is given in the question, that is by bank, and also depreciation is already given in the question, that is depreciation, and we can find out the profit or loss. What is the formula? Actual value minus selling price minus depre is equal to profit or a loss. Actual value minus selling price minus depreciation equal to profit or a loss. Suppose we are assuming we are getting a loss, we are putting in the credit side, and you are getting a profit, we are putting in the debit side to profit and loss account. Now I am writing loss by profit and loss account and by closing balance. So the difference is known as to purchase. Difference is known as what? To purchase. And where we are putting these purchase items? The purchase, that means we are purchasing a fixed asset. That means automatically and our cash is gone out. So that means it's a negative or it is outflow statement, outflow items. So investing activities we are putting in minus. So purchase of fixed assets, the cash is gone out. That means it's a part of outflow. So now I have already given 3 items. So the first account is known as provision for tax account. That second one is known as accumulated depreciation account, and third one is known as fixed asset account. These are the main items. So in the cash flow statement, these are the 3 accounts normally we are preparing. And again, sometimes we are preparing dividend account also. That is a very rare case only we are preparing the dividend accounts. And these are the main account we are preparing. And also now the board examination, the board is asking questions related to tax account and accumulated depreciation account and fixed asset account. Now you can see our question. So the answer is they are given, already they are given the answers. So in this, so listen, see operating activities. So they are given tax. The question is they prepare cash flow statement on the basis of the information given in the balance sheet of so and so company 31st March 2015 and 31st March 2014. So now you can see they are given the date, the financial year they are given March. This is not a calendar year, they are given a financial year, that is March. 2015 is the current year and 2014 is the basic year. So they are given share capital and also reserves and surplus, and non-current liabilities long-term borrowings, and current liabilities trade payable and short-term provisions. And asset side you can see non-current assets, fixed assets, tangible, inventories and trade receivable, cash and cash equivalents and other current assets. As per our format, first we are writing net profit, and then second item we are writing items to be added. There you can see depreciation is there, and goodwill written off is there, and interest paid is there. So this all item we are putting in the items to be added. Then less non-cash incomes are there, and the answer we are getting net profit before changes in working capital. And afterwards, very important point is there, we should apply the formula. So you can see this question. So formula is there. So what is the formula? Add increase in current liabilities and decrease in current assets, and less increase in current assets and decrease in current liabilities. This is a very important formula. It is really confusional. So for students level, when they are applying this formula, any confusion is there, you won't get the correct answer. So once again, add increase in current liabilities and decrease in current assets, or add decrease in current assets and increase in current liabilities. So add increase in current liabilities and decrease in current assets, unless increase in current assets and decrease in current liabilities. And finally we are writing less tax paid. Then you can see first point is known as operating activity. See answer, you are getting inflow or outflows. And the second point is known as investing activity. You are getting inflow or outflow. And third you can see financing activity. There also we are getting inflow or outflow. And last, A part is known as operating, and B part is known as investing, and C part is known as financing. Then last point, net increase and decrease of cash and cash equivalent. So you can see in our example, the final answer, cash flow finance, you can see 4,600, and just to look at their operating activities, operating cash and cash equivalent. So the opening balance is 2,400, and final answer you can see our cash flow statement, your final answer is 7,000. The final answer is 7,000. So you can see the monitor. So cash flow statement, the last closing cash balance we are getting 7,000. So here the examination hall itself, you can understand your answer is correct or not. So I think today's class all of you got the points. Only the main points only I can explain here. So just go through these accounts. That is the main thing. That is a provision for tax account, accumulated depreciation account, and fixed asset account. And also the format, I think all teachers are given to you the format of cash flow statement under indirect method, and on the basis of the study thoroughly. So you can expect a 6-mark question in the board, and also the practical examination also you can expect total 6 plus 6, that means accounting ratio 6 and cash flow 6, total 12 mark we can expect. I think today's class, see, all of you got the points, and this was today's section is very important. And cash flow statement now I am discussing because after winter vacation you have a practical examination. See, all of you should get 20 marks, and that is why I am taken this part today. And also after winter vacation many schools have a pre-board examination also. I think today's class is more beneficial to the students. So once again, thank you very much. I am James Thomas from Sharjah Indian School. So we can meet after winter vacation. All the best.